Can an LLC own an LLC? The owners of an LLC are called members. LLCs can have multiple owners or members. One important question is, can an LLC own another LLC? So, who can own an LLC? For the most part, virtually anyone can own an LLC, including foreign persons. Ownership in an LLC is delineated as a percentage. For example, John is a member of ABC LLC, and John owns 50% interest in ABC LLC. That said, another business can also be an owner of an LLC. That business can be a corporation or an LLC. There are benefits to having a corporation own an LLC, which we covered in another video. There are also benefits for an LLC to own another LLC as well. So you may ask, why would an LLC own another LLC? Thanks for asking. A few reasons. 1, additional liability protection. An LLC provides a layer of protection. So when an LLC owns another LLC, this could offer an additional layer of protection. This is particularly important when it comes to assets. Let's say you're in the real estate business. You want to invest in properties in Miami and another in Las Vegas, and you are renting these out through an Airbnb. It's a good idea to set up an LLC to own each of these properties so that each of these assets are protected because they are held by separate entities. This separation is important so that an issue in one property doesn't affect the other property. Now, the owner of these two LLCs can be another LLC, which could be in another state, like the state you're in. This offers an additional layer of protection. Another thing to think about, additional business divisions. An LLC might also own another LLC in an arrangement known as a parent-subsidiary relationship or as a holding company. Generally speaking, a holding company simply owns assets, in this case, other companies, whereas a parent-subsidiary relationship is where the parent company operates its own business and maintains control of other companies that it owns. In either scenario, a holding LLC or a parent LLC may want to create and own other LLCs to create new business divisions, thereby minimizing the risks of the holding LLC or parent LLC, because the owned LLC should have its own bank accounts, assets, and liabilities separate from its owners. Holding companies and parent subsidiary companies are common among corporate America. Number 3, taxes. LLCs are by default pass-through entities. This means that the profits or losses of the LLC are passed through to the owners of the LLC to report on their individual returns. If an LLC owns other LLCs, their profits and losses pass through to the owners of the parent or holding LLC. This avoids double taxation. This can be more complicated depending on certain tax elections. Beware of additional bookkeeping and reporting requirements. While owning multiple LLCs comes with the advantage of protecting your core business assets, keep in mind that it does complicate your accounting practices. In order to keep their assets and liabilities separate, each LLC will have to maintain its own bank account, accounting software, and records. There will also be additional reporting requirements with each state that the LLCs are doing business in. So now you know that an LLC can own another LLC, and hopefully you understand why some businesses find this structure to be advantageous.